Welcome to the Predictive Playbook. I am your host, John Ryan, and I'm hearing the sound of another show that is on here, and I got to turn it off. Oh, jeez. Yes, we're hearing it twice now.
Yeah, I hear you in the background.
This is what happens when you rush.
Well, at least the audio works. You're worried about your sound. Your sound is good. So good we hear you twice.
Well, where the heck is it coming from? Yeah. We even got an echo and...
Well, it's the replay because it's delayed. So you're hearing the YouTube feed. There we go.
That's better.
Want to start fresh so we have a clean copy?
Whew. Sorry about that, folks, but, when you have 35 windows open on your browser with sports information and investment, and sometimes these things happen. But welcome to the show, Steve. We're trading as we expected in Bitcoin. We're now below the 30,000 level, just by a smidge. There really hasn't been too much follow through, but the 618 Fibonacci retracement level is being breached with any close below 30,200. And when I say Fibonacci retracement, that's taking the range from the all-time high of 65,000 and change on the futures contract and going all the way back to the low previous to the start of the pandemic of 9,155. And at this level, we now have retraced 61.8% of that entire range.
Wow. And
this is not good news for bulls. But as we spoke when I was a guest on your show in the WagerTalk today with the Prez, we're getting close. We could have, I think what we're going to have is another capitulation, huge move down, maybe below 25,000. And that'll take out all the stops that are below here where people are just going to say, you know what? I bought it at 10. I own it. I can sell it now at 26. I'm out of here. I don't like this stuff anymore. And the sentiment that I've been running on the Twitter feeds since I'm a certified Twitter developer have indicated a sentiment that is so bearish right now, or I could say non-bullish, that it said I think we're pretty close to getting to a level that's going to be a bottom. And, when there's, as the saying goes, another financial term, Steve, for Tony Finn today at 4 o'clock for the Manny's Irish Pub, is blood in the street. When there's blood in the street, and that's a Wall Street phrase, that's when bottoms are made. And what they mean by blood in the street is not violence, but the fact that there's been so much selling because people are just fed up and scared and don't want to be part of it anymore. They just want to get out of it. So the stress is, gone from being involved with it. So I think we're getting pretty close to that. And, I'd ask you what you think about Bitcoin, but I think I already know what you think, and you're kind of on the same page here. But go ahead.
Well, I might surprise you. I might surprise you a little bit with what I'm going to say. Is obviously we've been bearish since the high 50s, low 60s. It's been a nice ride down. I was bullish from 10 up to 60, and I've been bearish from about 57 down to 30 here. I've said we're in a range for over a month and a half now between 30 and 40. I keep saying if it breaks and closes below 30, that's a really bad sign. As of now, we're about an hour or two away from the future markets closing as we do this video live Tuesday, July 20th. But, I'm just looking at my numbers here. It closed yesterday 30 and a half. It's now in the low 29s. So it looks like unless something changes, we're going to have our first close below 30 in several months. Everybody would think that's a run for the floodgates moment. It might drop a little from there, but we're not seeing real extreme action here. It almost seems like everyone's already gotten out, John, and that's why I've been trading sideways. So while that should be a little bit of a bearish sign, I wouldn't get in right now. I think over the next couple months, even maybe the next week or so, gets back above 30, it's going to be a good buying opportunity for years. For those people out there, once again, we're short-term swing traders. I don't usually talk about long-term investing. And once again, we're not financial planners. We're traders. Get your own advice. But for those of you that have been looking to take a long-term position in Bitcoin, which is not something I've done, I've been looking to trade it. But those of you that had missed the boat when it was 10, it was 20, when it was 30 on January 1st, those that got in at 50 or 60, that wasn't the time to get in a couple months ago. I think we're pretty close to a bottom. And now it is breaking below 30. So I'd said for weeks, that would be the sell sign. That's the floor breaking. But it doesn't look like the floor is broken. It looks like it's just cracked, And I really think we're near a base here. And maybe we'll get that capitulation moment like you mentioned. But I think a lot of those people are out now. And what you have to remember is there is a base of people that are never selling Bitcoin. And I think that's in the 20,000 range. So maybe it's 25, it's 26, it's 22. But it could still go to 50, 100,000, 200,000. So the risk reward is really good. And I don't even want to say on this trade. It's really an investment at this point if you're looking long term. So I think there's some time here in the next few weeks to start to think about getting in and holding. If you want to buy and hold Bitcoin, your chance is getting pretty close. I'd let this clean out, like you said, now that it's broken 30. But I don't think it's going to go too much lower.
Yeah, I can see that happening too. And as we've always been saying on these shows, the chart will tell you the story. And that story can change week to week. You might think the next chapter, like watching a Netflix and you're binging on it, the next chapter might have X, Y, and Z occurring, and then all of a sudden you watch the episode and it's nothing of the kind. Wish I could say that about The Bachelor. The Bachelor is the same. How should I say that, Steve? The same poor viewing every single week.
Yet it remains.
Yeah, it's just amazing. But anyway,
John, look at that candle. It's June 22nd. It was actually 4 weeks ago today, basically. The low for the day was 28.8 on the futures contract. It opened 31.6, hit 28.8, closed 32.5. That one, yeah, exactly. And we have still not hit that 28.8. Even today, the low today is 29.2. So that very well, we might look back and be like, I kept saying a close below 30 is what I was going to look at, and we're going to probably get that today, but it's a very calm close below 30. I almost feel like that a month ago. That might be the low, 28.8. So I'll make my prediction for this show. It's Predictive Playbook. I don't think we go below a close below 28.
You could easily be right. The last time we closed below 30,000 was December 31st, New Year's Eve.
Amazing.
And that is kind of amazing because that, was on the way up. That was the beginning of the bull trend from 9,000 up to almost 30. And, obviously the people who had done that trade had a pretty darn good New Year's Eve, I bet. But, when we're coming back down now, 29,000 seems so low. That's the psychology of the market. Back on late December, numbers in the high 20s were like, oh my God, can you believe this? It's already hitting this level. Because at that time, that was the all-time high. And we've since gone to 65, so the psychology of a human brain now looks at 29,000 as like, oh man.
Right, and that's why, hey, don't get me wrong. I think long-term this could be a really good buying opportunity, but I'm not saying to buy right now. I'm still short because this could very well go to 20, down to 15, down to 10, because look at the consolidation here over the last month. That's such a narrow range. You see those two red lines on each side of it. It's a perfect channel. And the way you play channels is to the up or the down. And it's technically, as of tonight, has probably broken to the downside of that channel with a close below 30 for the first time this year, as you just said. So that's a very bearish sign. The only thing that I'm wondering is, we'll find out. If it's a hard move down, then there's some momentum. But if it just trickles a little bit more, John, that makes me think the bottom's in. So we'll see. The next few days is going to tell me what I need, because trend followers, momentum players, when you get a several-month low or several-month high, that's a buy indicator for many systems. So if we don't see a lot of downside momentum to the the next couple of days, that tells me that the sellers are gone. So that's why I would say if we don't see it go down more than 1,000 or two the next couple of days, I think the bottom very well could be in. But yeah, put this in perspective. At the end of 2020, if you told us where we are right now, that's still a 50% gain for the year. So it's like 20 to 30. When it went from 20 to 30, I'm sorry, late November when it was 20, and now it's 30. That's a 50% gain still in the last 8 months, which is monumental. So there's a lot of downside still. But my gut feeling is that we're getting near the bottom. But we'll see. I mean, it's breaking below a very key resistance, support level, rather. And history speaking, it should really run down lower now. If it doesn't, I think that's actually a really bullish sign for the future.
Yeah, it's a very important time to consider being a buyer.
Or getting ready to be one.
Yes.
That's how you and I look at this. We're still short, but we're getting ready to turn when the time is right.
I drew a trend line here, and it connects the 30,250 low back here, and then this next low, which was the bullish hammer, which we did get a little bit of a rally, but then it's been failing. My concern, Steve, is like this was like a waterfall, and it was accelerating. It's just like watching a waterfall in nature. And then we did get, at one time during the day, this was a big red candle, and it looked pretty darn ugly, and then it bounced. And now we're getting another rollover. It's just kind of like, ugh. But this level here, which I'm thinking is like 20, it's right around 28,000, is pretty critical to hold, because if I draw a trend line from this guy here and connect these previous highs like that, you can see the triangle now. There, there. And if it breaks either direction. Or a pennant, like you're right, a flag or a pennant.
And what those do is, it's the same thing as a channel. It's consolidation. It's getting tighter and tighter. It's getting squeezed. And whether it's science or nature or whatever, when you squeeze something, it breaks out. If you squeeze a thing of toothpaste in the middle, it's going to go out the front because that's where it's open. But it's open in the back, it could go up that way as well. And that's what we're doing here. We're squeezing Bitcoin, and we're going to find out. Once again, people that are new to the videos and the shows, well, they're not telling us which way to go. Let the price action tell you which way to go. That's what John and I are saying, is that we're still short. Right now, the trend is down. However you want to draw the lines, the trend has been down for months. I'm just saying my gut feeling, my fundamental side, which isn't how I trade, but my fundamental analysis would be that we're nearing a bottom and there's going to be a good time to get in. So those of you that want to be long Bitcoin, the time is coming. It just might not be here right now.
Well said. The one trade that I'm pretty proud of is the charts told us to short crude.
Yeah. What did I say, 70? Did I not say 70, John, last week?
Yeah.
Play the videotape. Man, that was such an obvious support level.
And now we're even lower.
I know, but look at the break. It was right at 70.
Yep.
I mean, it was textbook.
Let's see. I got to change my my little cursor here.
Yeah, by the way, while you're doing that, because we probably won't have time to get to the S&P, but what the S&P has done the last 2 days, hard down, hard up today, is exactly what it did a month ago, and then it ran to all new time highs. So hard for me to be bullish the S&P, but it's doing exactly what it did a month ago, and it went higher. So we'll see how it plays out the next couple of days as well. But crude was going up every day during that. Now crude is starting to go down heavy, so that's not a bullish indicator for the economy.
It's not.
And interest rates also, the 10 years are as high as they've been in like 6 months now, even though they flattened today. Huge spike yesterday. The 10-year note went up, meaning the rates went even lower. The rates are as low as they've been in 6 or 7 months. So crude down, interest rates down is not what happened a month ago when the S&P did the down up and then kept going up. So I think we're at the top of the S&P. I would definitely, I know people don't necessarily can short it, but I definitely would not be adding to your stock holdings for those of you that are buy and hold investors right now. I wouldn't have been doing it for the last year either, obviously, and there's been a big run, but do not add new positions after yesterday.
Yeah, I agree with that too. And this is, I should actually print this chart out and put it in my book, because this is a classic case study of an engulfing candle at the high of the bull move. We then get a little bit of price action consolidation in here. We retrace almost to 50% exact, which is what I look for in an engulfing candle retracement to start establishing short positions. And sure enough, you had 2 days to get some really good levels. And even here on this up day, your stop is a close above 76.98. So you could put an intraday stop at say 77.20, 77.15. You got to give yourself some room, because I know for a fact, having been down on the floor of the crude oil pit trading floor, they chase stops. Yep. And it's the way it is. But that doesn't exist anymore. But don't kid yourself. You can do that digitally too. There's a lot of powerful individual traders. And back in the day, those guys that were on the floor were called locals. And not because they lived locally in New York City. That was the name for them. They were locals. They were independent traders associated with nobody else but themselves. And there's some legendary names we could talk about on another show that I saw trade, and for example, when you put up your hands like this and the palms are out, that's you're selling. You're looking to sell, which means that you will take everybody's buy to a certain point until you put your hands down. It could be 5,000 contracts. And to see an individual do that against like a Daiwa Securities or a Goldman Sachs or Salomon Brothers back in the day that was just amazing. I mean, to me, that was more exciting than Tom Brady scoring a touchdown in the Super Bowl, and I'm not kidding. It was amazing. So that's that. Let's take a look at the S&P here quick, because I know you have to get going for the WagerTalk tip-off show, which starts at
65% chance, according to the odds, that it'll be the last NBA show this season. 35% chance we'll be doing a show Thursday.
Well, I have a little betting system, and I kind of think you might be right. So I put a little thank you in there for having me on the show and stuff. I just don't see how the Suns can come back from blowing a 16-point lead in the first quarter, and then the game 4, they had a 6-point lead going into the fourth quarter, and kind of gagged that one up too. And their confidence has to be reeling. I can't, even though they're professionals, they're just like us. And you lose 2 games in that fashion, that's got to be difficult, if not impossible, to overcome.
I'll tell you on this, you talk about a channel. We talk about channels going sideways, but look at the trend line from the bottom to the top of that entire move. It is a perfect channel. I mean, it is so, talk about textbook once again on this S&P. And you see a month ago, we had the big drop down and quick up, and that's exactly what we had yesterday and today. So we'll see what happens, but I'm going to be surprised if it takes out that all-time high. We're at the second most expensive stock market, I think, in U.S. history. Maybe the first, depending on which metrics you look at. And once again, a month ago, oil was at an all-time 3-year high. Rates were a little higher than they are now. Rates are at like a 6-month low. Oil is dropping. I think those are leading indicators, by the way. I think the S&P and the stock market. And by the way, the Russell 2000 has been. I've been short the Russell now for about a couple of weeks. It rolled over in my trend following system several weeks ago, and those are small caps. I really honestly believe the big boys are just holding the S&P and the NASDAQ afloat, and at some point, how much more valuable can Apple or Amazon be? I mean, they've had their all-time monster moment here in the last year with these shutdowns. It benefited them more than anybody. It killed the small businesses, and that's why the Russell rolls over first. But at some point, the S&P has to roll over. And, once again, the trend is up. I'm not going to buck the trend, but I'm anxiously awaiting an opportunity to be short.
It's the similarity to sports betting. When a team gets on a winning streak, like the Houston Astros, for example, the trend is your friend.
Until it ends.
Don't stand in front of the freight train.
Your friend until it ends.
That's it.
There you go.
So this is AMC. I thought I'd show this real quick. Yep. And even this stock is trading bullishly. By the way, the sentiment reading on BitCoin is the lowest it's ever been in the history of the contract, which is granted only 2 years. But it's in a very bullish, non-bearish state, and it's a reading of 16 the way I calculate it, and it ranges basically from, it could conceivably get to 10 and it could conceivably get to 90 on the bullish side, but it's contrarian. So the fact that we're in the teens,
there again, what a great risk-reward ratio, though.
Yep.
That's exactly what I was talking about. I agree. I think the downside at most is 10. Most likely 20 is the hard stop, in my opinion. But we just saw 60 2 months ago, and there's some people saying it could reach 100 or 200. So, I mean, you're talking about a worst-case scenario, a $20,000 loss for literally a $30,000 to $70,000 gain. That's a pretty good risk-reward, and that's why I am bullish long-term on Bitcoin now.
Yep. So I know you have to get going here. You start at 4 on the WagerTalk tip-off show, don't you?
No, it started at 3. We got to go. A couple minutes.
3. 3.
Yeah, we'll be live. No, and you got Manny's Pub at 4. But I'll give you a shout-out. Looking forward to your system, and we'll do this again soon.
Yeah, it's awesome, man. Thanks, Steve. Have fun on the show.
Thanks, John.
Take care.